Is the Fed bluffing? Will they raise rates this year? Well, our next guest says the low rate trend is going to end in tears. This according to our widely known Fed critic and Wall Street pundit, Jim Grant, who joins me now back in studio. Jim, good to have you back on the show.
Thank you. It was nice to be here. Now, what did you say I'm going to say?
Well, you know we love talking about the Fed and whether they will raise rates, and here we are.
Yes,
still
they will.
In September,
They
debating this.
They may raise them or they may not.
Right.
I mean, my working hypothesis is that they'll never raise them, which is, to be sure, a bit extreme, but we got to make news, right?
So you really believe that?
No, I think that they have missed their market. I think they should have raised rates by now. I think they are looking at a flagging business expansion, and that if they're looking for a pretext to raise rates, they may find that they are sorry to have done it. That's my, was it 2 cents or 3 cents? I lost count as I was talking.
So they're looking for some clarity, you think? You think after this jobs
Well,
report here Friday?
they're looking for, I mean, what are they looking for? They're looking not to look foolish. They are looking to do the right thing by their own lights. But, you know, they've wandered, they have sped, they have continent hopped away from their original remit. They are in the economic planning business. They want the GDP to be just so. They want their rate of inflation to be just so. They want to have just enough employment, not too much, just enough. And I think that they are lost souls on the island of central planning. That's my impression.
So you have said that central bank policies, not just in the U.S. but worldwide, will end in tears. So does this
or laughter, depending on how you're positioned.
Right.
I think that finally, addressing the audience of Kitco, I think that we finally get paid in gold. I think that that we are embarked on a unique experiment in monetary manipulation. And if history is any guide, and mainly it is, though not always, otherwise think how rich the historians would be, but if history is any guide, it will not end well. They are doing, our central bankers, what one not ought to do, which is to manipulate the most sensitive prices in capitalism, which are interest rates. And do you know that today we had a corporate bond issued in Europe, or at least one quoted in Europe, with a negative yield. This is a corporation with bonds that yield less than nothing. That's before tax.
So does the solution lie in gold? You mentioned
I think the solution for investors lies in gold. I don't want to sound as if I'm completely crazy, just slightly crazy on the subject. But I think that the legacy money, that is to say gold, I think will supplant, certainly in the eyes of thoughtful investors, will supplant the euros, Swiss francs, yen, and US dollars issued so effortlessly by our digital money printers. I think these experiments are preposterous. I mean, you have Mario Draghi running out of bonds to buy in Europe.
Frightening.
Say it again, out loud. Running out of bonds to buy. So this morning's Wall Street Journal had a story about how they might buy stocks next. One of these days they'll be so daft as to buy gold. Well, actually, central banks have been buying gold. So to summarize, should I summarize? I think that
go for it. Take your time.
I've been bullish on gold basically since they invented it. That was what, like 30 years ago or something.
Something like that, right?
Yeah. With this couple of timeouts, but I do think that people who are owners of gold will be heirs and beneficiaries of the coming crack up of the PhD standard in monetary management, which is discretionary rule of central banks by former tenured economics faculty.
Well, is a bet in gold necessarily a bet in economic turmoil? Do you think it's that linear, or
well, no, I think it is an investment in gold is, to be sure, a kind of bet, in as much as gold yields nothing, although that's rather more than some bonds these days. But a bet on gold, to me, is actually an investment in monetary disorder. It's not a hedge against it, because we have monetary disorder. I think what we're waiting for, we gold bugs, we're waiting for is the perception, the spreading perception that we have monetary disorder. I mean, we know it, right? We know it.
So on.
What we have to have is the plain, the white bread and institutional investor realize, as it is now, people, I mean, the gold market responds to perceived economic weakness, like a weak ISI or whatever it is, services report this morning, and we're speaking on Tuesday, send gold up a few dollars. I try not to watch it more than once a day. It's a bad habit. But really, I think what makes gold finally go is not a discrete economic report. It is the revelation that we are embarked on a reckless, unsustainable experiment in untried and mainly crackpot theories about money and banking. That to me is the final driver of this gold price. It's not just, it's not what the Fed's going to do. It's the revelation that we are walking or running down the wrong path, and that we must regroup, rethink, and formulate a monetary policy that is based upon a lasting standard of value, like the one with the chemical symbol AU, that one.
It's funny how we say the Fed is so data dependent, but gold more so, it seems, right?
Well, gold to me is idea dependent. I mean, the Fed is a weather vane. They got no idea what's going on. I guess certainly gold is a shuttlecock also to a great degree. These mining stocks went down only 95% over 4 years, some of them. So you can't say we are an island of stability, we in the gold business, but I think that gold finally is not data dependent. It ought to be idea dependent.
On that note, it's always great chatting with you.
All
Thanks
right.
for stopping by, Jim Grant, and thanks for watching this edition of Kitco's Gold Report. We'll see you tomorrow.